Happy New Year. Let's look at the major trends of the past year. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of January 10th. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos, so you can know how the market is impacting your options as a home seller or buyer. These videos are usually about how the market has performed in the past week, along with some insights on where we see it heading. To start the year, however, I like to look at the year-end stats of last year. Before we look at those trends, if you find this information helpful, you can subscribe so you don't miss out on future updates. And why not share it with a friend also? Everyone deserves to be in the know about their local real estate market. All right. Let's look at last year. It was a cooler year in San Ramon as far as the real estate market is concerned, with the major metrics posting lower numbers on average than 2024 averages. This year, there were a total of 393 single-family homes closed, which is the second lowest sales volume in the past quarter century, the lowest being just 2 years ago in 2023, which was the first year after that crazy COVID market when San Ramon only closed 362 homes. In comparison, we usually haven't had less than 600 total sales since 2008. And that only happened one other time in 2001. What makes the fact that we had fewer than 600 homes sold for the first time in the past couple of years since 2008 is that there are upwards of 5,000 to 7,000 more total homes in all of San Ramon now compared to back in 2008. So being this low really says something about the current state of our market. The reduction in sales volume might make you think that our inventory turnover rate must have stayed extremely high. That was not the case. We started the year with a greater than 100% turnover rate, but quickly dropped off to average around that 0.5 or 50% rate, touching 100 just 3 more times last year. This lower than normal turnover rate is even more interesting to consider when you look at the average inventory levels on the year. While inventory levels did reach up to double the baseline in the middle of the year, they spent the majority of the year below that 45 number and ended up averaging about 45 for the whole year, which is usually what we would call a neutral inventory level. With that in mind, the 50% turnover rate is even more telling about how soft our market was last year. The annual average sales price for San Ramon was $1,924,000 this year. That's what the average ended at, which is a 2% decrease from 2024's average sales price. This number is interesting to me because while most homeowners never like to hear that values reduced year over year, the reality is that unless you bought in 2020 or later, you still have a significant amount of equity in your home. That 2020 spike in value really put us about 6 to 8 years. That spike here put us about 6 to 8 years ahead of the very healthy trend line that we were seeing from 2012. If you draw this line out, here we are crossing in another 3 years or so. So again, that decades-long line of projection from before that crazy COVID run-up puts our current value well ahead of where we would have been without that COVID year. We ended the year with the average sales price being below the average asking price. Oops, jumped ahead here, sorry. Another strong indicator that our market was softer last year is the average over-under number. We ended the year with the average sales price being below the average asking price. And in fact, it only reached above the average asking price at the beginning of the year and then crept just above the average asking price 2 more times towards the end of the year, but for the most part still stayed in that 15,000 or more below asking price range. But when you consider that the past 5 years have seen the annual average sales price being 2% or more over the asking price, it's a significant change this year. Even the past 2 years, where the market had already slowed down, the average closing was 2% over the average asking price. This year, the averaging under the asking price is the biggest sign to me that the market has really softened up and is lining up for a soft year again this year. The real question is why? Why was the market so soft last year? I think there are 2 major reasons. One is that crazy run-up in value that we saw in 2020, starting right there. Since home prices took a multi-year leap in just 1 year, it has priced a lot of buyers out of the market. That pricing out of buyers would have happened quickly and slowed that lightning fast appreciation in 2021 if it weren't for one other thing, and that is interest rates. Interest rates being at a historic low allowed a lot of buyers to reach higher in the home value that they would have been able to if the rates had stayed in that 4 to 5% range that we had been seeing prior to COVID. Now that rates have been holding high at well over 6% for the past several years, here we are looking back 3 years now since the beginning of 2023. It's touched close to 6% twice, but hasn't come anywhere near where the averages were before COVID. On the other hand, home values haven't suffered as much as they could or maybe should expect for one thing. As I mentioned before, this was one of the lowest sales volumes and also an exceptionally low inventory year as well. Because sellers are locked in with their current mortgage rates, as well as the potential of getting hit with massive capital gains taxes from the large equity value in the home, they are unmotivated to sell. Since inventory levels stayed so low, that has kept buyers from really being in the driver's seat and forcing prices down. All in all, even though it was the softest market we have experienced since the Great Recession, when you compare asking price to sales price, there are a lot of positive things to keep in mind about our housing market. Like I said, the average home value did come down compared to last year, but values in general are still holding at historic highs and well ahead of the home value trend line that we have seen from 2012 to 2020. As long as you aren't in the minority of homeowners that bought since 2021, you have a significant amount of equity built up in your home. Something I think this year's home sellers are going to have to really adjust their expectations on is value and time on market. Homes were on the market longer with less homes getting multiple offers last year. If you are thinking about selling this year and you have to accept the market is softer and expect it to soften even more this year. Don't assume that you're going to get the same value out of your home that your neighbor did last year or the year before. It's going to take a very strategic plan on pricing and marketing to get the types of offers you will be okay with. Hiring the right team will be more important than it has been in a very long time for you to be successful in selling your home this year. Thank you for joining me for this first market update of 2026. Don't forget to hit the subscribe button and ring the bell so you can stay informed on how the market shapes up this year. And if you have any questions about how you can navigate the stressful and confusing process of buying or selling a home, reach out to us directly or leave a comment down below. We are here to help guide you every step of the way. Have a safe weekend, and I'll see you next week with a new update.